Hello and welcome. For people of all ages, one of the things we strive to attain throughout life is financial stability. At the end of the day, we hope that this financial stability translates to financial freedom, and the most common way to attain this is by generating multiple streams of steady income. Today, we talk about attaining financial stability through investment and dividend stocks. At present, the S&P 500 index offers annual dividend yield of 1.29%, which is close to a multi-year low. Therefore, market participants searching for steady income need to be selective in terms of market segments and shares to find juicy yields. Whether you're investing for the long or short term, today's video will show you some of the best dividend stocks to add to your portfolio right now. Before we begin, remember to like this video and subscribe to our channel so you don't miss out on any of our videos that help set your finances on the right track to financial freedom. Without wasting any more time, here are 7 of the best stocks on the market today for passive income seekers. If the past few weeks are a sign of what might be coming to Wall Street, investors should get ready for a volatile 2022. In light of jittery markets and rising inflation, many investors are increasingly looking at passive income opportunities. Among the top-yielding sectors are real estate investment trusts, REITs, many of which pay monthly dividends as opposed to quarterly dividends offered by most other stocks. In addition, a number of business development companies, or BDCs, closed-end funds, exchange-traded funds, or ETFs, and master limited partnerships, MLPs, also pay monthly dividends. Investors can also diversify their dividend portfolios into other stocks and funds so that they get regular monthly dividend checks. With that said, here is our list of best monthly dividend stocks that should generate a reliable stream of income for long-term investors in 2022. 7. Stag Industrial. Coming strong at number 7 is Massachusetts-based Stag Industrial, an REIT focused on owning single-tenant industrial real estate such as warehouses and light industrial properties stateside. It owns over 500 warehouses, as well as 100 million square feet of leasing space. Stag Industrial released its Q3 results in late October. The company generated a net income of $48.4 million, or 30 cents per diluted share, compared to $22.4 million or 15 cents per diluted share a year ago. Funds from operations stood at $88.1 million, up from $70.7 million in the prior year quarter. In addition, cash available for distribution increased 32% year over year to $72.4 million. Wall Street highlights that Stag is well positioned to profit from a rising e-commerce adoption as witnessed during the pandemic. For instance, its largest tenant, Amazon, accounts for close to 5% of total rental income. Meanwhile, due to supply chain issues, many companies are investing in domestic manufacturing capabilities. Therefore, the demand for industrial real estate is also on the rise. Stag is one of the top monthly dividend stocks to buy, with a yield of 3.2%. Shares are trading at 12.9 times trailing sales. The 12-month median price forecast for the stock is $47.50. 6. Realty Income. Number 6 on our list is the San Diego-based Realty Income. Realty Income is one of the largest REITs worldwide. It focuses on high-traffic retail properties. Realty Income announced its Q3 results in early November. The company's revenue increased 22% year over year to $492 million. The firm's net income came in at $135 million, or 34 cents per diluted share, up from $23 million or 7 cents per diluted share in the previous quarter. Its normalized FFO per share surged 8.5% year over year to 89 cents, while AFFO per share increased 12% year over year to 91 cents. If you're looking to invest in Realty Income, you should know that REIT has recently announced the completion of its previously announced merger with its peer REIT. In addition, it has spun off its office assets in a new, publicly traded REIT named Orion Office REIT. Realty Income trades at $68, up 13% in 2021. However, shares do not look cheap at almost 40 times forward earnings and 13.8 times trailing sales. The 12-month median price forecast for its stock is $79. 5. Main Street Capital. Best monthly dividend stock number 5 is the Texas-based Main Street Capital. It provides debt and equity financing to lower middle-market companies. As a business development company, it mainly invests in distressed firms that need financing. Main Street Capital released Q3 results in early November. Total investment income increased to 48% year over year to $76.8 million, and its increase in net assets derived from operations came in $84 million, or $1.22 per share. Distributable net investment income stood at $52.2 million, or 76 cents per share. Cash and equivalents ended the quarter at $59.6 million. Main Street is highly regarded for employing a high due diligence standard regarding portfolio businesses, and thanks to a broader economic recovery, Main stock has seen its price surge above its pre-pandemic highs. It is currently at $42 per share, up over 30% year to date. Shares are being traded at 16.8 times forward earnings and 7.6 times trailing sales. Interested readers could consider buying around $40. 4. Ishares Preferred and Income Securities ETF. In fourth place, we have an exchange-traded fund, or ETF, namely the Ishares Preferred and Income Securities ETF. This fund invests in preferred shares, which have characteristics of bonds and common stocks. It started trading in March 2007. PFF, which has 503 holdings, tracks the ICE Exchange-Listed Preferred and Hybrid Securities Index. The top 10 names make up about 14% of net assets of about $20 billion. In terms of sectors, we see financial institutions, 61.14%, followed by industrials, 24.29%, and utility, 13.65%. Leading holdings include Broadcom, Wells Fargo, Danaher, Bank of America, and ArcelorMittal. The fund returned close to 1% so far in 2021, and the current price supports a dividend yield of over 4.4%. PFF could appeal to a range of readers searching for monthly passive income. 3. iShares Fallen Angels USD Bond ETF. At number 3, we have another ETF, the iShares Fallen Angels USD ETF. It gives access to high-yield bonds that have recently lost their investment-grade rating. FALN, which has 355 holdings, tracks the Bloomberg U.S. High Yield Fallen Angel 3% Capped Index. The leading 10 names on the list make up about a third of net assets of $4.9 billion. In terms of sectors, we see energy of 23.73%, followed by consumer cyclical of 16.71% and communications of 11.21%. Among the top names on the roster are Occidental Petroleum, Apache, Freeport-McMoRan, Kraft Heinz, and Western Midstream Partners. The ETF is up close to 2% in the past 52 weeks, and the dividend yield stands at 3.8%. Those investors in search of monthly yield should research the fund further. 2. Dynex Capital. Coming in hot at number 2, we have the Richmond, Virginia-based Dynex Capital. The company is a mortgage REIT that primarily invests in residential and commercial mortgage-backed securities. Agency residential mortgage-backed securities account for roughly 85% of its portfolio. Dynex released its Q3 results in late October, and the company's net income came in at $3 million, or 9 cents per share, compared to a net loss of $31.4 million, or 98 cents per share in the previous quarter. Earnings available for distribution increased 3 cents from the previous quarter to 54 cents per common share. On the results, CEO Byron Boston cited, quote, "We are pleased to once again have generated returns in excess of our dividend in the quarter. Our quarterly and year-to-date total economic return is 0.3% and 2.7% respectively." Dynex primarily invests in mortgage-related securities, including federally guaranteed loans through Fannie Mae and Freddie Mac. The company has delivered 13-cent dividends every month to shareholders this year. DX stock is slightly above $16, down 6% this year. Shares are trading at around 8.5 times forward earnings and 3.3 times trailing sales. A decline back to about $15 would improve the margin of safety. The 12-month median price forecast for Dynex Capital stands at $18. 1. Agree Realty. At the top spot, we have the Michigan-based Agree Realty. Agree Realty is a well-known retail REIT that owns freestanding retail properties. Clients of the firm include 24 Hour Fitness, 7-Eleven, Wawa, and PetSmart. ADC released third-quarter results on the 1st of November, and the company generated a net income of $36.4 million, or 52 cents per diluted share, up from its previous $21.3 million, or 39 cents per diluted share. Core funds from operations increased 44% year-over-year to $64 million. Adjusted funds from operation increased 42% year-over-year to $62.1 million. Agree Realty is focused on properties leased to essential retailers such as grocery stores and drug stores. The firm's tenants are responsible for building insurance, maintenance, and real estate taxes. The REIT boasts Best Buy, Tractor Supply, and Costco among tenants. If you are interested in investing in Agree Realty, then it is important to note that in 2021, the company switched from a quarterly payout schedule to a monthly one. It has increased its dividend at a 5% compounded annual rate over the past decade. ADC stock currently yields 4%. ADC stock hovers around $67 per share, up around 2% year to date. From a valuation standpoint, shares currently look expensive at 13.5 times trailing sales. Interested readers could regard a potential decline towards the $65 level or even below as a better entry point. The 12-month median price forecast for Agree Realty is $80. Which of these stocks do you want to buy? Which of these have you already invested in? Please share your thoughts in the comments section below, and don't forget to subscribe. Give that big ol' notification bell a ring to enable post notifications so you don't miss out on any of our new videos.